Hello and welcome to Building the Premier Accounting Firm. I'm your host, Roger Knecht, President of Universal Accounting Center, and this is the episode that you want to hear as it relates to international and doing business overseas. This is going to be a great conversation. Each and every week, as you know, I have guests on where we talk about things related to helping you build the premier accounting firm in your area, and today's going to be no exception. We actually have a guest. It is Larry Harding. He is the founder and CEO of HSP Group. He focuses on the provisional software and consulting solutions for businesses dealing with the challenges of global expansion and international operations. He actually focuses on the areas where he is an expert, including international business, finance, accounting, consulting, mergers and acquisitions, corporate development, venture capital, and private equity. He basically is the be-all, end-all of anyone wanting to work overseas. So Larry, welcome to the show.
Thank you very much, Roger. I appreciate being characterized as the be-all and end-all of global expansion. I thank you very much for that.
Yeah. So here's the thing. Obviously, I am very intrigued by this conversation because many of us work with clients that get to the point where they may actually start doing work overseas, whether with products or services. And so I think this is a very timely conversation. So let me first begin by you sharing how you got into accounting to begin with. I know you're a CPA, but what took you down that path? How did you start into this career?
So it was a long time ago now, but I was an undergrad at the Wharton School at the University of Pennsylvania. I was a dual major in finance accounting. And as I began interviewing my senior year with different types of prospective employers, I really stumbled into an affinity for the big 8 accounting firms at the time. So they would come in, they'd conduct mock interviews, and they just laid out a career path that I thought was really interesting, made a lot of sense with what I felt like I wanted to do upon graduating. So I took a job with, at the time, Ernst & Whinney, eventually EY, up in Boston, and began my career there. And it was everything I wanted it to be in terms of what I learned, the people I worked with, the types of emerging growth clients I sort of specialized in right from the beginning. Had a great, 8-year start of my career there, and it really has become kind of the foundational to everything I was able to do sort of after that. It was based on the people I met and the skills I learned starting off as a CPA.
Perfect. Now, obviously, with that path into audit and so forth, many people will experience travel. Were you able to travel much in that role?
I was able to travel. So after doing audit work for a handful of years, I became an M&A consultant. And so our job was to be retained by venture capital and private equity investors to go in and perform due diligence studies and of potential target companies. One in particular, I remember Advent International way back in the 1990s up in Boston was making an investment in Europe. And so had to get a passport. I'd never been overseas at that point. And I basically parachuted around. I started in Paris, went to Munich, went to Stockholm, and went to London to sort of conduct my studies and help Advent evaluate the premise of their investment. And that opened the doors to falling in love with sort of international business and global expansion. So it was a great accountant opportunity to sort of have my eyes open to a much different world than I knew before.
Perfect. This is exactly what I was hoping for. Now, obviously, with that little exposure, you got to a point where, with that experience, you then would later transition into founding HSP Group. Tell us about that transition.
Sure. So, like many of us in one of the telecom growth venture capital periods of the 1990s, I left EY and became a finance person at a handful of different venture capital backed companies. All of them were sort of young and smallish when I joined. They were private at the time, venture-backed. Some became public, some became acquired. All of them were sort of making their first steps overseas. So as I was sitting in headquarters, my job was to figure out how to manage, hiring 2 people in Japan and 3 people in the UK. And at the time, it was ridiculously difficult to try and recreate the wheel every single time. I had to find local in-country partners, had no context for who was good, who wasn't good. I'd asked my buddies down the street who they were working with to help them in Japan. And I found that I was spending about a third of my time on, 1 or 2% of my workforce. So it was a complete imbalance. And I felt like I had a day job, to do my regular work. And this global expansion thing, as interesting as it was just unbelievably inefficient. In 1999, one of the companies I was a CFO for was acquired by a company called Sienna. a very large telecoms equipment provider in the optical networking space. So that was in the hyper boom, .com expansion era. And so
Yeah.
they were entering 30 different countries. So it was kind of like what I'd experienced on total steroids. I stayed with that company as their head of international finance. And my job was to really figure out how to, move from what I was doing before to 250 people in London or 18 people in Brazil. And so my full-time job was to focus on this thing. And again, over the 4 years that I did it, what I found was I was still recreating wheels. What I dreamed for was just a company I could call or email and just retain to sort of manage this global footprint for me, make everything consistent from one country and region to the other, take care of all the things I need versus 8 different providers in each of the different countries. And what I realized after 4 years was because there wasn't a company out there doing that, there should be. So I decided to start High Street Partners back in 2003. Had not ever been an entrepreneur before. Total back of the envelope. In hindsight, no idea what I was doing or what I was getting myself into. But between myself and a bunch of great, founding team hires, we actually built that business from the back of an envelope, to a 40 million revenue business. And, I like to think really changed the industry quite a bit.
That is awesome. One of the things that really astounds me is in accounting, we might perceive things as being very black and white. Debit, credit, we have these financials, a P&L, balance sheet. It's uniform. It's the language of business. So we're very strong in that. And many of the individuals that listen to the show, I'm sure, have clients that may be kind of expanding and growing into international business. They're taking their products or services overseas. And all of a sudden, the accounting isn't so black and white. It's not 2 plus 2 necessarily anymore. You're dealing with currency exchanges, you're dealing with other laws, and there are some nuances that obviously take place with the accounting, especially if you go out of private and go into public. A lot of nuances at that point. What are some of the challenges that you see from an accounting perspective that are sometimes just overlooked and missed as people try to expand their businesses and they just kind of have these gotchas? What are some of the gotchas they need to be aware of?
So how many hours again is this podcast? Because the list
we're going to be doing this in
short.
about 40, 45 minutes. So this is kind of like the fire approach to this.
Yeah, no, I was being humorous there. There are a lot. So particularly from, an accountant's perspective or really the back office, which accounting is a piece. Mm-hmm. There are a lot of things. So nobody ever goes overseas because they want to be compliant with local regulations. They go overseas because they want to sell into new markets or they want to hire a team of software developers in a low-cost location or, greater talent available. So the reasons people go overseas are always very, expansion-oriented. But what has to follow behind is that whole, compliance and support and efficiencies. And so it's nature is very reactive versus proactive. But the list is really long. I mean, if you're going into a country, you need to figure out things like, what entity type should it be? Should it be a subsidiary? Should it be a branch? Is a branch even allowed in Poland? Are there rep offices? So what are the entity types? What inevitably lands on the controller's desk is, how do you set up a bank account? How do you, get what sort of funding do you need to fund the entity? There's a whole concept of permanent establishment. There's a concept of, cost plus versus buy sell. So the myriad of accounting specific issues, again, is really pretty long and in many cases very complicated. And yet, the finance, accounting, controller team needs to be on top of it. The business expects you to fully be on top of that stuff, even though you might not have gotten, more than a month's notice that we're going into Eastern Europe, or you might not have sort of been a part of the strategy team that decided where we're going in the first place. So the reactive nature of it and the complexity is quite a 1-2 punch that, really the accountant and from an accounting firm, the folks at the client that you would support, they just tend to be overwhelmed by the details that crop up specifically, in areas that they're directly accountable for.
Well, I appreciate at the beginning you pointing out that this is not even long enough in time to address all these things, because I completely agree. This we're just going to scratch the surface here, but I think the curiosity of it all is at least warranted. So let's just kind of put it into simple terms. Here I am, and I'm in a situation. I've got a client that wants to go overseas. First thing that they're going to be dealing with is I've got a customer that wants to purchase the product or service, and they have a different currency. And so typically through the merchant account, you can service that. They can handle the merchant can handle the currency exchange. But what if I wanted to have that physical presence? And you brought up getting a bank account and having that physical presence, setting up an entity, whether it be a branch or whatever, there physically in that country so that you can now have a bank account in that country and
Mhm.
not necessarily through the merchant account have that fund come through, but maybe have the funds deposited in an account. Now that you have an account, maybe you can get a merchant account service there that you can do transactions literally within the country and not have to worry about exchanges. You can leave the funds in that specific country and transfer them when it's behooving to the business to pull them out of that business or that bank and put them into the other bank here where the corporate headquarters may be. But then there's tax ramifications of moving the money around. So we've got to consider the tax ramifications. How am I doing so far?
You do. We have a spot available for you. If this podcast gig doesn't work out, we have a role right next to me that you can help
I
us with.
love it. I just got a job offer on the podcast. No, thank you, Larry, because honestly, I think that is exactly what we're looking for is that idea of what is it that I'm missing as we're going through this. And I really think from an accounting perspective, we're going to be asking questions, checking off boxes that the business owner just isn't even thinking of. They're just getting excited to send their product or service overseas to a new market, open it up, and hopefully duplicate what they're doing. But that duplication is just it's almost endless. So I'm assuming you've got a checklist of sorts, or kind of a process of assessing: is it even worth moving? Are there countries that are more welcoming to move into and more accepting versus avoid this one because they're not very embracing of that type of commerce?
Yeah.
Where would you go with that?
So there are definitely countries where it's more complicated and less complicated. So there are all these different studies. Business complexity. I think every country inherently would like business expansion to work and be successful in their country.
And seamless.
Political and seamless, but whether it's the political culture, whether it's traditional, whether there's a protectionist oriented element to making sure foreign businesses don't come in and compete with local ones. It varies wildly the difference, the complexity between going into the UK or Singapore versus going into India or Brazil. So you need to be mindful of what the complexity profile is of a country that you're considering looking at, because that needs to be on the list of evaluation criteria, as well as the size of the market and the cost of local employees and things like that. The business complexity in the first place is something to be mindful of. That's the type of thing that we specialize in, providing that insights from your listeners. Wanting to make sure their clients are properly supported, making sure that they have those insights, and that criteria includes things like that. So yeah, that's really sort of, if you start from moment one, the complexity of where you're thinking of going to is something that you really want to be on top of. We tend to go to market. We have it's an umbrella that sort of two approaches. One is our global people solutions. So if you're going to hire people in these overseas places, how do you do so in a compliant manner, efficiently, being on top of legal and employment regulations and requirements. And then the other part of our business we call global entity solutions. So that relates to what type of entity structure makes sense. How do you open a bank account? What are the tax requirements, whether it's corporate income tax, direct taxes, or indirect VAT equivalents? What are the annual compliance filings you need to be on top of? Do you have a local board member requirement? Do you need a local shareholder? So, broadly, the global people solutions and the global entity solutions are sort of the, helpfully organizing way to think about the different elements.
So this has caused me to now ask a question regarding mergers. Imagine a business is interested in going into a new market, but rather than starting from scratch, and as you just described, creating an entity, getting the bank account, hiring employees. There's also a path of, I'm going to go into that market, but I'm going to go find someone that's a comparable business and hopefully merge with them. And now through the merger, they already have that physical presence. They already have that business entity that has a bank account. They already have employees. Can you talk about either the complexities or benefits of kind of accelerating that whole path of, rather than starting from scratch, just taking the time and due diligence to merge with some other entity?
Yeah, so that can certainly be one approach. There, when you're talking about global expansion in the M&A world, there tend to be two ways to think about it. So, one, you buy a local company in a country or market that you're looking at. That is done quite a bit. It's interesting, depending on the country, and it's really most of the European countries, for example. Right at the core of the considerations, there's something called TUPE regulations. Transfer undertakings. I can't even remember the term, but TUPE requires that if you are, buying a company and it involves them sort of moving from one legal employer to another legal employer, that is going to require a full replication of the benefits that they have, or you're completely non-compliant. So even before you close the deal, if it involves that sort of different entity situation, you need to be on top of, okay, how do I get the full benefit? What are the benefits that they have, and how do I get that implemented in my NewCo, business on day one? So, there are complexities like that are different than sort of a domestic M&A transaction consideration. It's done quite a bit. And then the other one, which we see a lot of, and we do quite a bit of work supporting, is a carve-out transaction. So let's say, a private equity firm buys the division of a larger company. And so that could be a transaction that, could be 8, a dozen, 25 different countries that all on day one have to be set up. It's almost like moving people from one house to another. So you have to have all the entities set up, all the tax filings. Most of them require a bank account, these different things. So when we're involved helping a carve-out transaction, we actually call it mayhem assistance, because the folks trying to get the deal closed, the new management team may be coming in, have no idea how much needs to be built before the doors even open. And then those doors open, and it's like a party where 500 people walk in right away. How are you going to get all the food to people and get the drinks to people? And just the complexity of being there from day one and having a full operating business from scratch with a global footprint is where a lot of complexities can arise.
How much time are we talking to go through and create those different elements so that transaction can happen and the business can exist in this new status?
Yeah, so more often than not, the answer to that question is more time is needed than is given. Typically what happens is that the deal people, announce a transaction is going to close in 90 days. In that 90 days, if you're going to have a successful close, you need to set up entities. And in some countries and markets, having a subsidiary available to employ people can be done in as little as 30 days. In some markets, think of China, think of India, it could be 120 days. So, and it's often dependent. Well, you can set up a subsidiary pretty quickly, but first of all, a bank account needs to exist first, and that can take 90 days. So, it can be quite a bit of time to get everything done and all the T's crossed and I's dotted. But again, it depends a little bit on the complexity of the markets as well.
Yeah. So there's obviously an interest to be compliant. We're trying to obviously meet whatever legal ramifications we need to meet. We've got to have the financial ability to take transactions. But I'd like to talk about the payroll component for just a moment. Hiring employees, getting them paid. So here I am in the States, for example, and I need to pay somebody in another country. Well, obviously they've got the money. It needs to appear on their bank account in that currency, and we need to pay corresponding taxes. So what are some of the ramifications from a payroll perspective that we need to consider?
Yeah, I mean, again, complicated. So there needs to be a strategic project related to getting a payroll, set up and up and running when you need them to pay people. So figuring out who the global payroll provider is that you need to have involved, getting the right entity, the right employer set up, getting the company registered to be able to operate a payroll, the payroll registrations that need to take place, figuring out what the cash flow ramifications, when are you going to get funding in, what currency you're going to use, making sure that you provide for the gross pay and what's the net pay, but then, the employer social taxes, which are typically much, much higher overseas than we're used to here in the U.S. They're typically, from a benefits perspective, there's sort of mandatory, government provided benefits, healthcare being an example that's different in most places overseas than what we have here. And then there are sort of discretionary benefits that you need to consider. So the whole, not just payroll, but human resources related piece needs to be part of the whole wider project plan as well. And the big risk is often, you really don't want employees to give them a reason to be unhappy or disgruntled from day one. So you really want to make the new experience as nice and seamless for them as possible. That can put a ton of pressure on the back office team at headquarters. Oftentimes the accounting folks, payroll, et cetera, having to be on top of things that is typically different from their day job.
So we've hit on three key parts of this, and I'd just like to real quickly summarize them to see if there's anything more you'd want to say about the three, and then I have another question. So first of all, we're going to a market. We have to obviously set up the entity, and so legally we've got to have a presence and determine how we're going to acquire that presence. That once established, we then have to worry about the commerce side of things. So it's the bank account, it's figuring out how we're going to do the transactions, how are we going to have the monies go back and forth and so forth, so that we can actually do business now in the country where we have an established presence. But the third component is the payroll. It's somebody's going to now be employed. They want to get paid. And within days, we're going to have to cut our first paycheck. And like you're pointing out, it's more so than just the payroll. It's also the human resource, the benefits associated with that, some which are compelled by the country in which we're in. There's certain things that are expected to be offered. But at the same time, there's cultural things. They with their employment, want certain things to be met. And that might be different than what we're offering here in the States, whether it be health insurance, personal time off, and so forth. So three very key elements. Is there anything more you'd want to say about those three parts?
Those are a big three from sort of a newly launched, particularly an M&A transaction, or just moving into a new country for the first time. The other complexities can arise with growth. It's one thing to have 5 employees in a country, but when you have 105, that's a much different animal. How do you deal with that? One of the complexities often is if you have a global footprint, it's not typically just one toe. You're in a handful of different countries more often than not. And so how do you have, for your own sanity at headquarters, how do you have a level of consistency so that what you're doing and how you're doing it, in Hungary bears any resemblance at all to sort of the same thing that you're looking at doing in Korea? You got to close the books and consolidate things at headquarters. It could take 3 days in country A, but if it takes 12 days in country B, that becomes a headquarters, a closing of the books, simple management accounting complexity. So, figuring out what level of consistency, what level of sort of vendor complexity you have between who's doing what from different countries and different regions, all of that is really important. And then there's the whole systems perspective. You might have a global HRIS system that you're using, or what's your global accounting system? How are you keeping the books? How are you getting the accounting records from the local entity consolidated in your ERP system globally? So there are all those different pieces also that you need to be on top of.
Perfect. Now, here's the question that I wanted to ask. A lot of the companies that may be working with my listeners might be growing into these different markets. And because they're just growing, they may be wanting to kind of take the toe approach. I just want to stick my toe in the market and figure it out. I don't want to go create an entity. I don't want to necessarily employ anyone there. And so they're going about it where they're perhaps going to find somebody in the business that they can bring on through a consultative thing where they're going to be invoiced for those services. And they really don't have a physical presence there. They're selling there. They've got a consultant that's helping them, maybe a paralegal that's assisting them with some of the legal side. When is that moment that they should consider maybe it's time to actually go from just tipping my toe in the water to I need to go all in on this? Do you have any advice as to how to know when that transition ought to take place?
So definitely. Over the last 5 or 7 years, there's been a really nice emerging part of global expansion that has come up. It's called employer of record. So you can basically, rather than set up an entity and hire people directly, you can go to any of these employer of record firms. HSP Group is one of them, but there are a bunch of them in the market. And it's basically an employee leasing concept. So you're basically paying somebody to have a local entity in the market that you want to be in. They can become the legal employer, and you just pay a fee to that person to lease that employee back to you to do your work. So if you're moving into a market that you think and hope is going to work out, be helpful, but you don't know for sure, that's a great approach to try.
I love it, because I'm thinking a lot of the listeners are in a position where they have clients that would love to just kind of step into the market, try it out, see if they can get that presence and really something that's secure before going all in. So I like that transitional step. Related to this, I think it'd be smart to also ask about expats. A lot of times people, they are traveling, they are living at an Airbnb, they're going to resorts, they're working by the poolside, and they're traveling. With their travel, they're still as a business in the United States, but now they're working outside of the States and they're enjoying that lifestyle. Is there anything that they need to be considering that would really say you technically aren't an expat, you actually are working in this country? Is there something to be discussed there?
There's a lot to be discussed and quite a bit of complexity and potential risk. So you can on short-term business visits, you can have people travel over and fly out from the U.S. and work there for a week, a few weeks. As a rule of thumb, if over the course of a year somebody is in country A for more than 90 days, that's a pretty good indication that a line has been crossed from a typical business visitor. Clearly, if they're there more than half the year, 180 days, they're basically tax resident in that country, and that requires a whole bunch of things that need to be understood. So, first and foremost, are they legally allowed to work on that kind of level of permanent basis in the overseas location? Basically, do they have a proper work visa? To sort of be there legally working. It's a business visit is quite different from, hey, you're actually working, even in the UK or kind of what's thought of as a simple country. What is the work status that you're actually legally able to work in country at that level of time, that amount of time? To the degree that you have created a tax residency issue, you're basically employed in that country. Well, who's the employer? What's the legal entity that's employed? If basically you haven't set up anything and transferred this person, that U.S. company, is basically employing someone kind of illegally in the U.S., in the U.K. if they're working in the U.K. So what's the work visa situation? What's the tax residency approach? You start getting into, the income tax liability and the social tax liability that person's salary, if they're over the line, is generating in country. How's it going to be paid? What's the amount? What are the ramifications for that person at home with their own tax filing status? And then when you move into a true global mobility, this is an expat situation. There's just a whole bunch of complexities in terms of, how you're going to run shadow payrolls. What can be a cost of living, adjustment difference that you need to be on top of. If that person's over there with their spouse or their family, can the spouse legally work there? Is there a visa available for them? So global mobility is a whole extremely complicated world. It's another area where sometimes, not all the times, the employer of record approach can be helpful. For example, there are countries where you can have a U.S. employee, you can use an employer of record company that basically can sponsor the work visa. So you can just sort of transfer, they become, a temporary employer of that person. So there are approaches that can be helpful. It's a kind of low bar how helpful and in how many places that can work. But yeah, global mobility, expat situations are extremely complicated.
Yeah. I'm not excited that they're extremely complicated, but yes, I understand what you're talking about, because I do have individuals that I've known that have chosen to go to Costa Rica for a month, and then they choose to go to Puerto Rico for a month. That's a territory, so that's fine. They go to UK for a month, but some will choose to stay for 3 months, and they'll actually, in that stay, work remotely and do their jobs. And so that brings in this question of, when does it become an issue that I need to be aware of, either personally or the business itself that has the individual doing the work from that location. So that's an interesting dynamic. But it also causes a flip question. Imagine that they are in country and they're doing something, but they're not selling services. They're just working from there. But conversely, I'm actually selling product there. I'm having people purchase product or services, and there's transactions going on. But because I'm in and out of the country, I'm not really documenting that the transaction occurred there. Is there anything that I need to be aware of as a smaller business that's kind of going into a place, into a market, doing a transaction, and then leaving? Usually there's a nexus that says you need a certain amount of revenue to then justify the tax. So there's those compliance issues in that regard as well. Anything you'd want to add to that?
Yeah, there's a concept called permanent establishment. So
Hmm.
oftentimes, what you're doing in country, if it can be deemed as sort of, more, not just a support function, you're actually selling in that country, or you're doing something that really creates a taxable presence. Do you have PE in the country where that person is doing whatever they're doing is a very important issue. If you have a permanent establishment, you really need to be mindful of, okay, what sort of entity structure needs to be thought of, what sort of tax or related filings need to be made. So the whole concept of PE is one that needs to be understood and considered. It's a maddeningly gray area. It's not black and white. So us accountants tend to get a little frustrated when things are that gray. But that is a reality of permanent establishment. But for anyone in the sort of global expansion world, that's one of the terms that the nomenclature that, if someone can talk to you about PE, you sort of know they're in the club of global expansion.
Yeah, yeah. Because what I'm finding is when a business owner, they choose to take their family on a trip and they go into a place for 30 days, that's different than 90 days, right? If they go there and they're just working from their computer, that's one thing versus they're out going about and doing transactions in that area and currency is exchanging. Even if they're going online and making that purchase, it's a question of, okay, well, you're not just working from there, you're selling there.
Mm-hmm.
And those are some of the things that you're talking to. And I think it's a worthwhile conversation, especially as accounting professionals, to have with our clients of, that's fine to go into a marketplace and test the waters and see whether or not there's an opportunity. But you've got to realize there's a difference between testing and also at the same time having a presence. And so that's where you've really got to be able to, as you're an accountant, give good advice and direction to these clients that are seriously just trying to grow their businesses and they want to actually find where the opportunities lie, but they need to do it in an intelligent way.
Yeah, and that's where I really feel like the accountants and the CPAs that clients rely on for good business advice. That's where they can really step to the front and add quite a bit of business value. So it always drove me crazy as an accountant. Sometimes I was doing work that I know would just need to be done. My clients didn't really care or want it done, but they had to get it done, and that was not fun. But when I had an opportunity to really be that sort of trusted, helpful business advisor to make sure that they're not running into trouble or they're making good decisions, that's great work for us CPA types to be able to do. And I think global expansion is a fantastic opportunity for us accountants to sort of, prove our business value to the clients we work with.
Well, first of all, I'm really appreciative of this conversation only because of the fact that I think there is such a thing as a global economy and small business makes up so much of it. And we just need to realize that as we're counseling and working with our clients, we need to be giving them good direction as to how they can actually take advantage of that opportunity that they're presented. So that's where I'm at with this. Easy question to ask at this point. What did you think or should ask, or what were you expecting me to ask? What should I have asked that I haven't?
You asked a lot of really good questions, so I'm a little stumped to come up with an easy answer. Um, no, I mean, you touched on all the different issues. Maybe a little less or a little more focused from a CPA perspective could be on the tax requirements. Figuring out what the corporate income tax filings are, different tax strategies to sort of make sure profits aren't piling up in dumb places; they're piling up in smart places. How to stay on top of that whole, world of sales tax equivalency, which is indirect taxes, value-added tax, VAT. Many places, it's a goods and services tax in certain markets, consumption tax in Japan. So, and that especially arises when there's product being imported and exported into country locations. So the whole VAT, if you're moving goods into a country and then you're going to sell it onward throughout Europe, that whole VAT ramification world becomes a level of complexity. But no, you touched on many things, and hopefully your listeners get a flavor for some of the different complexities, but also the different opportunities and the different ways that we can add value to clients, because it's pretty fun work and helpful things to be involved with.
Well, thank you. Well, one of the things that I was hoping in this episode to accomplish in the 45 minutes that we've been on is just basically an introduction to the accounting professionals of what their clients might experience as they consider going international. And if I could just kind of wet the whistle and get them at least some familiarity of questions they ought to be asking either themselves or bringing to the table for the client to hear and consider, then I think this has been a success, because now at least we're all in this space of, I know enough to be dangerous. I know enough to ask some questions. And it's not that we're going to our clients to say, hey, as a bookkeeper, accountant, tax preparer, I'm the expert in international business. It's to say, hey, here are some things that we need to start considering and discussing. And obviously, HSP is a great resource that I'm sure they could reach out to and tap into, especially when it comes to like the employee leasing that you elaborated on earlier. And I think that's a very viable solution to some of the challenges that they're going to face, because admittedly, the payroll finding and hiring somebody, that is probably the greatest question, because you can create the entity, but you got to have somebody work there.
Yeah, definitely. I mean, the big value that I think CPAs can provide to their clients is asking 5, 6, 7 really good questions, and then that's easy enough for all of us to do. But just simply by asking those questions, what happens is the people you're talking to typically are not sort of back office focused. Even the CFO, even the controller who you're working with, the owner, founder, whatever, they're going into markets for very assertive reasons. But if you ask 5 great questions, they probably won't have the answer, but they will be smart enough to know, I need to get those answers. So that simple function can add tremendous value to the global expansion initiatives of the clients that you're working with.
I love that word that you just said. From a CEO perspective, it is assertive. They're looking at top line growth. Where can I go? Let me go get this market. I'm seeing opportunity. But then there are some questions we need to ask that might temper that and do it a little bit more due diligently. Can you quickly share what those 5 or so questions ought to be real quickly?
Sure. First of all, when are you going? Where are you thinking of going to? Why are you thinking of expanding there? What is the business opportunity you're looking at doing in that country? Are you selling? Are you hiring developers? Whatever. If you're hiring people in that location, what activities do you think they're going to be doing? Have you considered things like what you're going to do from a bank account solution? Have you thought about different entity types in that market that you're going into? Are there other locations you're thinking about as you think? This is sort of what you're looking at now, but if you look 12, 18, 24 months out, what do you think the global expansion picture might look at? What are the criteria for success? How will you sort of define whether your initiatives overseas have been successful or if they're not working? That's a great, sort of laundry list to start with. And it's very, it's not technically complicated. It's very pragmatic business, approach questions, but just those types of questions will generate the right type of thinking to identify the things that need to be understood and be on top of.
I love these questions. These are wonderful. I just add a few more to it. What's the timeline in which you would like to see this accomplished? I think a lot of times they're a little bit more eager than the time will admit or permit. And you said earlier, and we're exactly right, it always takes longer than we expect. And so can we temper that? The other that I'd add is, how much capital do we have allocated for this? Do we have enough money to actually make this a worthwhile venture? Can we get into this, and do we have the means to actually build it up before we see our break even? And when do you expect to see the break even? Are you willing to actually invest in this and not see the revenue you're hoping for or the monies for 12 months, 18 months, 24 months? I mean, how long can you sustain this ramp up period before you actually see the revenue you're expecting? And if they're saying, oh no, I think I can make money in 6 months, 6 months, we're not not even going to be operational. So it's just
Yeah.
going to be one of those conversations that I think just comes back to the business model and can we actually do it there? And then legal representation. I think we need to actually have some legal contacts in an area, somebody that can help us with the setting up the business entity in the right way, as you mentioned. Are we going to be tax compliant? Do we know what those tax ramifications are so that we can do our pricing accordingly and actually show an ROI? Because we might be accustomed to a certain tax cost here, but there's going to be something more there. And yeah, these are phenomenal questions, and I appreciate each and every one of them because it really gets the mind thinking. And if we can go into the conversation just with these questions, it makes it look like we're contributing to the whole decision here.
Yeah, you will be adding a ton of value to the clients that you're working with just by helping them think about those things, and you may be saving them, quite a bit of money and quite a bit of frustration.
I love it. This is perfect. So, Larry, this has been a wonderful, wonderful conversation. There are a few things that I'd like to summarize, and then I'm going to come back to you for a closing thought. Before I wrap this up, one of the things that I want to do is point out to the listeners, take advantage of this. Larry is offering in the episode description an opportunity for you to reach out to Larry and just basically take a few moments of his time, his valuable time, and answer any questions that you might be having. They might be client related and so forth. So take advantage of this so that you can reach out, find out what insights he may have to your current situation, and really take advantage of the generosity on his part to offer up some of his time to answer some of the questions you may be experiencing as you're dealing with some client-specific situations or just some curiosity elements that you may be facing in your own business. So definitely take advantage of that in the episode description. Related to this, one of the things that I want to actually include here is a list of two ebooks that you want to take advantage of. One is called In the Black. It is 9 principles to make your business profitable. These 9 things would actually help as part of the conversation with your clients. These are short-term, midterm, long-term discussions that you ought to be having, not only for your own business, but that of your clients that would really contribute to this discussion about growth and expansion. And then related to that is a book called Red to Black. It is a guide for accounting professionals to really help businesses move from being in the red to being in the black. And it's basically assisting with cash flow management. And it's perfect for this conversation as your clients are in that growth mindset and leveraging capital and what they're going to do that possibly could overextend them and how to avoid that. So if you're wanting a copy of each of these ebooks, go to the episode description, get a copy of each, and apply these principles in your business. Now, as a summary of our conversation, I couldn't have asked for more. This was phenomenal. Larry has a wealth of experience, obviously starting early on as he went into Ernst & Young and assisted them traveling around and getting that international bug. Starting HSP, he literally did become that expert in what it takes for global expansion and international operations. He's obviously answering the right question or asking the right questions, and I'm sure he has answers to many of them. And with his experience and expertise, I'm sure he can help not only businesses, but us as accounting professionals navigate the nuances of what it is to take a business and grow it. So if you really enjoyed today's episode, definitely go ahead and like and share a comment about it. But with that being said, Larry, what last comment would you like to add to the conversation today?
So I've thoroughly enjoyed our time together, Roger. Thank you very much. Closing comment is global expansion is a phenomenal opportunity for CPAs to really show their mettle and add value to their clients just by asking a handful of really good questions, knowing that you're there as a resource to help them, and certainly guiding them in the right direction. So take advantage. Be very happy when your client talks to you about global expansion. It's a phenomenal opportunity to show your value and really be of significant assistance to them. And helping them be successful in global expansion is a phenomenal benefit to the clients and their values and their operations. So these are great things, as complex as they are. And so welcome the opportunity to take advantage of that.
That's beautiful. I love it. Just the fact that we as an accounting profession can offer this value and really assist our clients in their growth. That's wonderful. So here's what I'm going to do. I'm going to wrap this up. Everyone, I appreciate you listening to the show today. If you'd like more information, more free resources, check us out at universalaccounting.com. There's a number of free resources available there for you to take advantage of for your own business and as well helping you with your clients that I would encourage you to check out and take advantage of. Also, be sure to register for GrowCon. If you haven't taken the time to register for our annual event, this is for owners of bookkeeping, accounting, tax businesses. It's where you get to go and hear from the stage, the experts, what it is we need to be doing to work on our business and take care of the clients that we service. But at the same time, you get to meet with your peers, interact with those people that are also doing exactly as you are, hear from their successes, their things that they're giving as advice, and most importantly, make some great connections that you can use to actually assist your clients as well. And then lastly, you get to meet with us at Universal Accounting, our staff, the team of individuals that are committed to helping you be in business for yourself, but not by yourself. So take advantage of registering for GrowCon and attend that event. As for the episode, if you haven't already, subscribe. It's this episode and so many others where we're giving nuggets of information that you can leverage to actually become the premier accounting firm in your area. So if you haven't already subscribed to the podcast, do so and set those reminders so you get the weekly notifications of the new episodes. And definitely go back and listen to the previous shows. We've got a number of playlists that are put together, a number of episodes that you don't want to miss. All of these are basically there to assist you in hearing from the experts and applying these principles in your business. Lastly, if you'd like to learn more about these principles and things that we've discussed on this or any of the other episodes, feel free to reach out to us. You can visit us online. You can go to universalaccountingschool.com, or you can give us a phone call. You can reach us at 801-265-3777. And always remember this, if it's about accounting, it is universal. Take care, have a great day, and be safe out there.